If I could share with you one of my most important secrets that I can just lay it out there on the line that will help you become a better trader in time, it's going to be understanding market structure, identifying those structural breaks in the market to know which way to trade. So in today's video, I'm going to share with you those secret pieces of advice or tips that have helped me over my 13 years of trading improve and constantly become profitable and consistently from month to month to year. And we want to be able to do so that we can grow our accounts. All right. And the next video I'll probably do is talk about compounding. I'll just kind of share with you some examples or some things that will try to may help you along your journey, because people always are asking about risk to reward type things, how to compound account. So we'll talk about that probably in the next video or two. But today, let me share with you the number one secret that I can, kind of just lay it out there on the line is you need to really master market structure, right? Understanding, just basically overall which direction you need to actually trade. Is it to the upside or to the downside? But the thing that helps me most importantly is identifying those structure breaks, identifying, also is the market reversing at any given point, because we know the market could be bullish at one point and then have a slight pullback to where we go from bullish to bearish, but then that trend of pulling back to the downside was breaking structure lower could be very short-lived. And so that's why I like to talk about using a higher base chart and using multi-chart confluence when marking up appropriate zones, ones that we can wait patient for the market to pull back to you in the market, and then executing off of a lower base time frame. So it's all about the strategy. How I trade is marking up higher base, high probability zones off of a higher base chart first, and then scaling down or moving down to a lower base chart. And that lower base chart or higher base chart is whatever you choose or want it to be. For me, I trade range based charts. So when I'm trading the Nasdaq futures, I'm looking at the 120 range to kind of give me some directional bias in the market. And then once I've identified a solid, say, demand zone or supply zone to trade from, then I move down to my lower base chart. So when it comes to market structure, again, that is probably the biggest secret that I can tell anyone out there to learn, is that one particular concept. And what you really need to focus in on are major structure points that are being broken, okay? Areas where you have nice consolidation of zones, or I'm not saying zones, but areas where the market is kind of consolidating and then breaking structure to the upside or downside. Like right here, where we see the market pushing lower and it's breaking structure. So we made a low, lower high, lower low. And then it kind of does this right here where it starts to pull back to the upside, making higher highs and higher lows. But then as you can see, what is it doing? It sweeps this low right here, which is a major low to the downside. So that's a major structure break. But before it broke that area, it started making what? Higher highs and higher lows back to the upside. Okay. And so we're trying to figure out, is it going to continue pushing to the upside? And what we're looking for is to see if it's going to start taking out structural points back to the upside to the left hand side of the chart. So for example, right here, if it swipes, or not swipes, but if it breaks above this area, where we break to the upside, pull back, make a higher low, and then make a higher high, then that's going to let us know that, okay, we just broke structure to the upside. We made a new high, pull back, made a higher low, and just made a new high. That's going to let me know, okay, this is the type of thing that I'm looking for. This is basically what most traders would consider like an inverted head and shoulder, left inverted shoulder, a inverted head, and then a right inverted shoulder right here, and then breaking higher with a new high. That's kind of what most traders will look for or identify as a reversal in the market. But if I don't see that type of pattern take place, and we just come back up, maybe break above a prior high right here to the upside where it took out a bit of structure, but then turns and starts folding and starts taking out multiple lows back to the downside and then running this major low, this is the kind of thing that I really like to focus in on, is to see, is it breaking major structural points, okay? So for example, if it's coming down to the downside and we're bearish and we have this low here, but then starts running back to the upside and makes a high back up to this area here, all right, my thing is we are already bearish. So I'm looking to see if it's going to start taking these minor areas of structure or breaking through them to the downside and then taking out this major low here. If we break that low, then all we need to do is look for a pullback to a key area, resting, within this swing right here where the market can continue running to the downside, or after it's broken this bit of structure right here, just look to see if we get another break of structure to the downside. So right here, for example, the market could have came back to this area right here around 21,260, which is a supply zone right here. You can see aggressive selling and there's a gap attached to it. So that's one of the things I want to stress and talk about today when I'm kind of revealing these secrets that have helped me, again, over my journey within the last 13 years of trading, which have helped me define and really, identify key high probability zones. And that gap back at the zone, which is basically in balance, back resting at a supply demand zone, is very critical when it comes to the style and how I trade. All right. So right here, I would have marked this zone. Say, for example, I'm just going to show you right quick. This supply zone right here. Okay, after we broke a bit of structure to the downside, breaking this low right here. So it broke this area here, came down at a new low, lower high, breaking structure below this area here, pull back to this area here of supply. Why? Because we have aggressive selling right here. When it came back here, as you can see, it didn't reject this area here. It went up. What were they trying to do? You have to understand this. So if you understand what's taking place right here, leave a comment down below. I want to see how many people, after watching so much of the video content here on this video, knows what actually took place when the market broke above this prior high right here, when it was making, pulling back to the upside. Most of us would have been looking for a reaction at this supply zone right here, but it actually pushed a little higher. What took place there? And would you have traded to go back short to the downside? But first and foremost, comment down below if you know when the market was pulling right back to this area and broke through this zone here, because you should know by now, once it breaks through a valid supply or demand zone, that once it does that, it makes it invalid. And once it breaks above that, we're looking to see if it's going to continue higher and breaking with the candle above and closing above to see if it's going to push higher. In this case here, it basically swiped that area. So if you know what that is, where the market swipes and takes out, and see this right here, these are equal highs resting right here. So what type of movement is that? What play were the market makers making when they came up here and took out this area? Leave a comment down below. I want to see how many traders out there have really been following the strategy and identifying movements within the market. Just simply down below, list exactly what took place at that area. So they did that. And then they move lower and then they move back higher. It's a game that they like to play, to kind of stop traders out. It could have been when people were actually stopping buyers out. So people started buying right here and then they stopped them out, came back, grabbed some area below and then pushed the market higher. So you have to understand what's taking place there. I mean, I'm not going to call it out, but I just want to see how many people actually know. So leave a comment down below. Outside of that, what we need to understand too is like when the market starts to turn back in the opposite direction, for example, here, we can see it taking out some area of structure right here. Okay. It making highs, higher lows, high breaking structure here, comes back, makes a higher low here, and then breaks back to the upside. So this could be we have again inverted left shoulder, inverted head, inverted right shoulder, and pushing back up. That point there, we're starting to break structure back to the upside. So you have to be able to understand structure. That is a very important component when it comes to trading. Now, the rest of the secret lies within marking up and knowing which areas, qualify as high probability zones. It's, even though I like to say that it's a secret, I'm sharing these pieces of advice or tips to let you know what to look for. Number one, the structure breaks. Number one, the structure breaks, which is all following the basic concept of understanding market structure. Once you've done that, you're more than 50% of the area there, okay? Because you need to understand which way to trade. Once you understand what's going on in the market, then you can understand if you need to start looking for supply or demand setups. So the market starts breaking higher here. We took out a major area of structure right here, okay? As you can see, the market's making these higher highs and higher lows, but then starts making these lower lows and lower highs. It's taking out all these areas of these lows, and once it makes and runs a major low, back to the downside, then it took out structure there. So if we break the top here of 21,698, this is a major area of structure that built up in this area where they're kind of consolidating right here before they flush to the downside. It pushes back up on December the 20th and takes out all this area of structure. Once you see a major area being broken, okay, so pay attention, where it broke a major low to the downside after creating this structure, but then takes it back out, takes the top end, which is this high right here, out on this movement back to the upside. Those are the big areas of structure that I always talk about focusing in on. Look for those major areas of structure breaks to be taken back out. major low to be taken after building up some structure here, breaking to the downside, taking out this low, and then once the market runs back up and takes out this high, it's taking out a major area structure there. So at that point, once it takes out a major area structure, all we need to identify is a key area to where the market can pull back to for a beautiful demand setup, just like right here. Okay, it takes out that structure right there. It pulls back. This is a demand area right here. Aggressive buying. For all those that don't know about, aggressive areas of buying or selling or demand or supply, that's all it is. Supply and demand zones are just aggressive areas of buying or selling. In this case here, aggressive area of buying where there's a gap attached to it. The gap, what I talk about in so many videos, is an imbalance back to the zone. So we'll just wait patiently. Trading is all about being patient. Yes, this happened towards the close of this trading session here, but it still gave, an opportunity for a quick scalp there, right? I'm a scalper by heart. I don't look for a swing of position or stay into a trade for multiple hours. I'm in a trade at least maybe 10 minutes at most and getting out of a trade. Now, would I personally take this right towards the close? No, but I'm just showing you an example of what took place here. The market came back to a high probability demand zone. That's where we look down and move down to a lower base chart. The rest of the pieces of or advice of secrets of what I can give you and how I personally trade and laying things out that I've kind of built up and learned myself over time. It's just understanding what takes place next once we tap into and mark up our higher base chart or zone. In this case here, higher base zone off of the 120. I'm just moving down to my 24 range chart. And for those that may trade time-based charts, maybe using a 60-minute chart, you're trading from a 5-minute. I'm just identifying key zones within a zone. Moving down to a lower base chart or a lower time frame chart is going to allow you to redefine the zone, zoom more into a more narrow entry point on the chart so that you're not taking or incurring as much drawdown. That's all I'm talking about when it comes to multi-chart confluence. So from here, once I have my higher base zone marked up, then I'll move down to a lower base zone, my lower base chart, and look for a zone on the inside of this larger base zone from the 120. Once I've done that and I identify one, it's just a matter of waiting for it to pull back to that zone and then looking for rejection to go long. Okay, why? Because now we're breaking structure back to the upside, taking out a major area structure. When I say major, but I'm gonna say a beautiful area structure, which was a key area of structure, okay, where the market was pushing lower. Now it's pushing back higher, taking out this structure break, this area of structure to the upside. So when I see things like that, I'm just waiting for a pullback to go long. All right, and then what takes place there? The market reacts off that zone, pushes up, pulls back again, and then we start breaking back to the upside here. Now, if it comes up here and takes out this area here at 21,808, okay, then it's taking out these minor areas of structure as it's moving higher back to the upside to break this area. Again, we've got the market creating structure back to the downside, but then creating more structure as it's pulling back or pushing back higher, taking out now, which was these were minor areas of structure. Now this is a major high right here, okay? If it breaks that, then we're just going to look for a pullback to a key area to take a trade going back what? Going back long. It's just like right here when the market broke above this area right here, okay? That's a minor break of structure above this area here at 21,655. If we break there, the market comes back. You can see this is a valid demand zone to take an entry to go back long. We have a small gap attached to it, high probability zone, following structure. We haven't really taken out any, key areas of structure back to the downside. So we're still bullish. So we look for the market to either come up here and break above this high right here, this major high, or through some area of minor structure back to the upside, okay? So this would be a minor area structure right here, and it comes back, taps, breaks this area here to the upside as it's making higher highs and higher lows. As you can see, it didn't break this area at first, but it came back down after breaking some minor area structure, tapping into this zone, rejects it, pushes a little bit higher, comes back, breaks a little lower, and swipes this area of liquidity right here, these lows, as you can see right below here, okay? Equal lows, kind of a double bottom setup here after this little swing. Then after grabbing liquidity, what does it do? It runs back to the upside, taking out all these areas up here and grabbing liquidity from the top end. So we're still bullish at that point there. So this is where we can look, again, like I said, a pullback to actually go long at some point, all right? As long as we are, having these structural breaks to the upside, that is the key ingredient to the recipe, is that I want to see where the market is breaking structure, either up or to the downside or to the upside, following suit with the structure of the market and pulling back to actually, execute a valid entry. Okay. Again, the market it dips back here. Okay. After making a high here, got a structural break above this area here. We're still bullish to the upside. It comes back. Okay. Starts, high, making these little swings to the upside here, come back. Now, this is a low volume, not low volume, this is a low probability setup right here in which the market did reject from, but it did break this area structure here above 22,007. Okay. So it broke that, tapped back into this low probability zone and pushed to the upside. But just be careful because now the market, is starting to set itself up where it made a high here. It made a lower high here, and then it melted to the downside from there. And then it didn't take out this area structure, but it did start breaking lower. So right now we're in between kind of, this low of this swing here where it broke structure to the upside and this high right here. So we're kind of wedging right now, kind of moving in the middle in a sense, off this leg back to the downside right here. But in this case here, we'll be either looking for a structure to be breaking to the upside, or we breaking down here. This is a major high here, and this is a low right here. But I would be more so entertaining the opportunity, possibly to go actually long, because we haven't broken or taken out any key area of structure quite yet to the downside. So, but it's kind of a 50-50, flip of a coin, because we are in between. In a wedge, in a sense, in between this low here and this high right here. So this is a major high right here. It's pulling back. So you have to wait to see if it's going to follow suit with that pattern. Where we have a left shoulder here ahead, and then maybe a formation of a right shoulder to the downside here, to where it starts taking out structure to the downside. So at this moment, in which we do right here, as you can see, we had a low. Lower high, and then it's breaking. There's a minor area structure right here that it broke to the downside. So this could be, that's why I said we're kind of in between the stance right now, and where it could actually start moving lower. But I still would like to see now that it's made a low here, another lower high and then a lower low, to give me the full on confirmation that it's still trying to push to the downside. But we are below the VWAP, as you can see here. But these are some of the the secret pointers or of advice or tips that I like to follow suit in my with my strategy and how I trade, just using multi-chart confluence that I'm sharing with you guys. So just kind of look for those things. Look at market structure, determine which way is the market actually moving. When you see major breaks of structure, like right here where it's dipped lower and then it comes back, breaks a structural point where it's taking out a major high or a major low, again, like this right here. This was a major low that it broke, pushing lower. Another major low, hasn't broken that area, but it comes back up. We take out this area of structure, as you can see right here, to the upside, and then it made a higher low, and on a higher high. Excuse me. We're bullish, okay? And if we come back and dip back and take out now a major high right here, you look for a pullback. If you just can wait for the pullback to a higher base chart, mark your zones up, correctly, and then just wait for it to pull back. When it taps into the higher base zone, then move down to the lower base zone to look for your entry points to go long off of the lower base chart. So that's all it is just following suit with structure, marking up these zones, higher base, lower base, looking for the sweet opportunities where it rejects off the lower base. As long as it's high probability, I do not like to take my trades from low probability setups to where there's no imbalance resting back at the actual zone. So, just kind of gear up and then rewatch this video and some of the other videos definitely here on the channel, covering the, how I trade, the strategy. I go in and talk about the strategy in so many videos, breaking things down. And for all those that are the elite channel supporters, that's where I go into great detail in discussion about the trade breakdowns, trades that I actually take and post over on the Discord, so that you can understand first and foremost why I took that trade. Okay. And it all centers around the strategy itself, marking up these zones and looking for the trade supply and demand, but also talk about, what to look for when it comes to profit target, what to look for when it comes to stop loss, what to look for when it comes to, the structure of the market at that time, which enticed me to want to take that trade. But you also get, if you are already an elite channel supporter, thank you for being one and supporting my efforts as a content creator, because that's basically what you're doing. But in reward, or giving a kickback, that's where I give back these perks and rewards, like the trade breakdowns and the video playlist, and that great video that I did covering market structure. So I've been making this video content for some period of time now. If you spend some time watching those videos, especially the elite channel videos, and if you want to become an elite channel supporter, the link is down in the down in the description portion of the video. Very inexpensive. It's only $6.99 a month to join, but you get so much additional video content where I go into great detail about the strategy surrounding these trade setups, so that you can take similar trades just like that. So again, it's only $6.99 a month. That's not $699. That's $6.99 a month. All it is, and the link is down below. The Discord link is also down below. But that's all I have, guys. I'm gonna wrap this video up here. Jump off here. I hope everyone has a great rest of your weekend. And if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn your post notifications on simply by clicking on that bell once you clicked on the subscribe button. And also make sure to drop a like on the video if you found value in today's video content. Just trying to share with you some of these secret things, which aren't so much as secrets in a sense. I'm just kind of putting them out there, letting you know so that you can grasp and understand it, of what I'm looking for first and foremost, from step one to the end, to the final step, when it comes to my mindset of looking at structure all the way down, drawing down to the strategy itself. So take care, see you in the next one, and goodbye.